All right, 160 points higher, 16,774 is where we are at right now. Just quickly, if you can put up the Z stock, it's, I think, not quite at the day's high, but almost there. It's up 6%. The high was 357. We're at almost 354. So it's moving up and moving up rapidly at this point in time. So just something which, I mean, a deal, and Yash was talking about it, has been anticipated for a while. Nigel, anything you're picking up?
You know, I'm just looking at the screen, and there's a huge volume spurt as well that we are seeing on Z. This is pure screen reading as of now. There's a big, in the last few minutes, we're seeing a lot of volume that's changed hands out there. So we'll have to keep an eye out on that front. It's moved to the high point of the day. The question is, how much can it re-rate from here? We'll be waiting by whether or not the deal has finally gone through or not. And, is there any change in terms of the contours? For the time being, the street is clearly excited. It moves to the high point of the day. And just one more factor, you pull up the F&O plate of Z Entertainment. I think there's been quite a big build-up in terms of open interest. So that should be another factor that plays a role as well. Yeah, there is a big build-up in terms of its open interest as well. And that could result in the stock potentially moving into the band, maybe today, maybe in the next couple of days as well. So that's another factor. It could go into the F&O band. So we'll keep an eye out. For the time being, we're waiting by. Prashant.
Okay, so something to keep an eye out for, but 355 is where Z is now trading at. Well, time now for our D Street Chatter segment. Nimesh talks to a variety of market participants to get us an insight into what is happening across dealing rooms. Nimesh, thanks for joining in. What are you picking up? Afternoon.
Hi, afternoon, Prashant. So, we saw a bit of a pullback in the first half from the oversold zone. But again, on the Nifty, there is a clear resistance of 16,800. That's been talked about very widely as well. That's the level to watch. For a further meaningful upside from those levels, that has to be decisively broken. So 16,800 is the Nifty level to watch out for the bull, as far as the bulls are concerned. In terms of flows, again, it's a mixed day of trade. Still, there is a lot of selling pressure in the select bank names. So, financial as a space has been under pressure, and that still continues from the larger FIs. On the other side, it's a technology which is helping the bulls. To some extent, there is a sector tailwind as well, but I guess it's also because in anticipation of strong Q3 that you're seeing a lot of buying back in the technology names. In terms of events to watch, I guess the COVID scare and the ETF withdrawal are the few important things to watch out for the next few days. But clearly, from a technical point of view, the Nifty looks weak, and the big resistance is 16,800. That's the level to watch for the bulls. If there is a meaningful upside from current levels.
All right, Nimesh, the Nifty itself is moving around like a stock. But talking about that, what are the stocks you're tracking?
So in terms of individual names, the first stock on my radar is Apart Industries. That stock is up 10% in today's trade. The last one I checked. There is a lot of buying interest from the larger HNIs, is what I understand. But also there is a buzz of a corporate development in Apart Industries. So that's the first one. Second stock is Deepak Nitrite. Even that stock is buzzing in trade today. Remember, there is a board meet scheduled tomorrow for fundraising. I believe the QIP announcement should come very soon after the board meet. So that's the second one. Third stock is TVS Motors. There were reports earlier as well of a large block deal. I understand the Sundram Clayton block is likely to come very soon. So that's the third one. And the last stock is Hinduja Global Solutions. That stock today surprisingly is up 13%. The last one I checked, it's buzzing very strongly in trade today. And it's been long pending the special dividend. It looks like the street is anticipating that dividend announcement soon, and hence you're seeing a big move in that stock as well.
Okay, thanks very much as always. Interesting list of stocks, and I mean a fair bit of flavor in terms of what's happening across dealing rooms. Well, in terms of short-term, near-term trading ideas, BTST Trades, Mitesh is with us as always to tell us what he's got on his plate. Mitesh, afternoon, welcome back. What do you have?
Afternoon, Prashant. I think you or Nigel had highlighted Colgate. I think that's something which is now trying to give a reversal from oversold levels. I would typically want to see the stock start getting past today's high. So 1450 is the pivot. So once it moves above that, buy with a stop below 1440 for targets of around 1475, 1480 on the upside. And the other one is Dixon Technologies. That's already given a reversal. So that's a BTST. Keep a stop below 5440 and look for 5530 as the target for tomorrow.
Okay, all right, Mitesh, thanks a lot for that. Well, keep an eye out on the Z stock. That's flying away. Big volume spike in the last 10 minutes or so. So that's one stock. The other one is Metropolis Health as well. That's the other one that's really bursting away as we speak, up close to around 6.5%. And bulk of Metropolis's move has come in the last 20-25 minutes. So keep an eye out on that one. But let's move on then. Navigation service provider CE Info Systems, or as it's better known as MapMyIndia saw a strong listing on the exchanges amidst a volatile trading session. It's come off the high point of the day, but Rima is with us to fill us in with all those details. Rima?
Thanks so much for that. So the opening was very strong. It opened at 1565. So that was straight away a gain of close to about 50-odd%. The demand for the issue was also a fair amount. So the overall subscription stood at 155 times. Just a quick word about the company. Now, this is a maps company, a digital maps company, similar to a Google Maps, but they predominantly sell to enterprises. So the enterprises are automobile companies like MG Motors, Hyundai, where they will power the navigation software in a company. The maps, the inbuilt maps, which are a part of the company, are provided by MapMyIndia, but they also cater to consumer technology company, a PhonePe, an HDFC Bank, Airtel, amongst other enterprises, to help with the maps for the logistics or locating the nearest bank branch ATM. About the financials of the company, now FY21 was a tough year for all companies. It was no different for MapMyIndia. So the overall revenue growth was just 2.6%, but that is because about 45% of its revenues comes from the auto sector, which was hit by the slowdown. Since then, it's been seen a strong recovery. So the 6-month FY22 revenue growth, the first half of the year, already hit 100 crores. Margins have improved to 45% currently versus 20% that it had in FY20, and we have seen an improvement in the company's profitability as well. Back to you.
Okay, all right, Rima, thanks a lot for that. Well, I think we have market expert Anand Tandon who joins us on the phone line, I believe. Hi, Anand. The stock of the last 20 minutes or so is Z Entertainment. Now, the streets clearly seems to be baking in that this merger is going to go through. It's already moved from around 250 to around 350 in the last 3 months. Scope for re-rating is there from here on, or do you think bulk of it is done?
Well, that's difficult to estimate as to how much the market will value the re-rating, but the reality is that the merger will certainly create a company which will be of significant size and market share, and it will have a mix of products which each of them individually do not have. And given the kind of high budgets that we are seeing and the breakup that we are seeing in the media space, where there is a lot of fragmentation that is happening because of OTT and so on, having that a much higher profile in terms of the product will certainly help. So I think there is no doubt that the joint company will be far more than just 1+1.
Okay, all right. So that's about Z. Then the other one that's doing well, which we just spotted, Anand, is Metropolis. Remember, some of these diagnostic companies, they had a big run, in this last 1 year or so. Whether you're talking about Dr. Lal Pathlab, whether you're talking about Metropolis, Thyrocare, obviously there was a deal that took place out there. But your view on the space from here on, clearly health is going to be even a bigger priority from now on. But how much of, how much upside do you have, given that these stocks are now by no ways, anywhere close to cheap?
Well, they've not been cheap for a long time, but I think this continues to be one of those plays which not only has a trigger in the near term because of the health scare that we are all looking at, but also from the perspective that there is also consolidation going on in the industry. And as regulations strengthen in terms of the kind of standards that various labs have to maintain, this will only increase. So by and large, the bigger will get bigger in this in the lab space. And, there is a significant cleanup in the practices that go around using labs and referencing and so on. All of that is getting cleaned up quite considerably, all of which is good news for these players. So from a market share and growth perspective, I think they are fairly strongly positioned. Whether the valuation is comfortable or not, I think the whole market still has some correction to do in terms of valuation.
Anand, the boring old stock like Colgate, any thoughts? It's corrected a lot and back at Feb 2020 levels. Do you track it? Have you ever owned it?
Well, it's one of those that you should be looking to buy whenever it falls, simply for the reason that, there are two. I think by and large, FMCG is a place that I'm somewhat bullish on. One, it has underperformed to that extent. It's not really the top of mind right now, and therefore it's always a good time to look at it. But more importantly, the simple theme I'm trying to suggest is that, WPI numbers, a double-digit CPI number, a single-digit, you are going to have a squeeze in margins. which are the companies that can do well in the margin squeeze, those that can raise the prices, and therefore those which are powerful brands. So all branded players, of which Colgate, I don't think anybody will have doubt as to the power of its brand, should be able to actually maintain and grow their margins even in a tough time. Most of the companies which don't have, for example, tariff protections, etc., find it difficult to pass it on to the consumer, and therefore will have some kind of margin degradation, which the market and the analyst community is not factoring in. So yeah, and I think, for a long-term player, trying to buy stocks like Colgate when they are on the way down is a good time.
Okay, all right. Hang on, Anand. For the time being, we'll slip into a short break with news that the markets are holding at around 16,780 odd. Well, we'll slip into a short break, but as we do that, here's something that you, our viewers, must take note of. CNBC-TV18 and the National Stock Exchange have come together to promote investor awareness through a very special campaign, Informed Investor. Now, that empowers you to make the right decisions with your money. Investors need to check the frequency of account settlements that they've opted for. If you've opted for a running account, well, you need to ensure that your broker settles your account and sends statements of accounts regularly, and in any case, no later than 90 days. But in case you have opted for 30-day settlement, well, then the broker needs to settle and send statements of accounts within 30 days.